Hey, family, welcome to tonight's live stream. I am going to be the host of tonight's show. My name is Timalyn Bowens, and I am America's favorite EA. I'm also the owner of Bowens Tax Solutions, which is a virtual firm based in Louisville, Kentucky, and we focus and specialize on providing taxpayers tax relief. Now, in my firm specifically, we focus on working with first generation entrepreneurs who owe the IRS six or multiple six figures. All right. So typically, when we have that type of situation, the taxpayers have the balance, but they can't pay that balance in full, which is what inspired me to do this live stream tonight. Because I have other taxpayers who will reach out to me and they'll ask, hey, do you still work with taxpayers even if they aren't a first generation business owner? Do you still work with taxpayers even if they don't owe quite six figures? And the answer to that question is yes, but sometimes the person either isn't a good fit to work with our firm or is honestly not cost efficient for them to hire our firm to step in the gap for them. So, when I'm on this channel and I'm talking about tax relief, one of the questions that a lot of people have is, what is an enrolled agent? What do you do? How can you help me? So I don't want to skip over that when I introduce myself as Timalyn Bowens, America's favorite EA. An enrolled agent is the highest license that the IRS awards to tax professionals. In order to become an enrolled agent, you have to pass a three-part exam that covers different parts of the tax law. So there's individual taxation, business taxation, and then there's policy procedure, the representation part that I do, and then also ethics. Now, when I speak about representation, what I mean is for those taxpayers who owe the IRS 100,000 or 200,000, 300,000, with representation, I'm able to step in the gap on their behalf when it comes to dealing with their IRS situation. Let me give you an example. Let's say that a taxpayer is being audited, right, by the IRS. Now, in that situation, I would explain that as if they're being accused of not having something accurate. The IRS wants more information. This would be the equivalent if somebody was called to court. Now, you absolutely can represent yourself in court, but it's not advised that you do. The same thing goes when you're being audited by the IRS. It's not recommended that you represent yourself. Reason being, you don't specialize in tax law. You don't deal with it day in and day out. So that would be one of those situations where, as a taxpayer, you can hire someone else to be there to represent you to make sure that during that audit, you don't give information that you don't need to give, right? During that audit, you don't give information that would actually hurt your case versus help your case. So that's just one example. Another common example that people are deathly afraid of and don't realize that they have the right to tax representation to handle is when a taxpayer is levied. Now, when we talk about levy, this is part of people's worst nightmare. When it comes to dealing with the IRS, people are scared of going to jail, and they're also afraid of their bank account being cleared out. If the IRS sends a notice to your bank for them to take out a certain amount and send it to the IRS, that is referred to as a levy. A levy is also when the IRS has sent a letter to your place of employment and lets your place of employment know, hey, this person owes us. We're calling dibs on the amount that they owe. And when you pay them, you're not going to pay them the full amount. You're actually going to take part of that out and send it to us to help satisfy that debt. That is called a wage garnishment and is also a type of levy. So you kind of can get from those different scenarios where it would be important to have tax representation. And I will give you this warning. There's a lot of stuff going on at the IRS right now. So if you have a balance and you can't pay it in full, you don't want to be caught in a situation where you don't have a plan on how to negotiate with the IRS, how to set up a payment arrangement, because you want to make sure that you are always in control of your cash flow, right? You don't want to wake up and have that levy where the IRS has garnished your wages. You don't want to wake up and go to the mailbox and see that the IRS has issued a tax lien, which essentially is a letter giving notice to your county clerk office that you owe the IRS a certain amount and they have dibs on your property. All right. So let's talk about the first thing that you should do if you owe the IRS and you have a balance that you can't pay in full. You give me one moment. I'm going to check and make sure that I'm popping up over here on LinkedIn, because tonight's stream is on YouTube and LinkedIn. And sometimes I can't always see comments and things from LinkedIn. So I'm just going to check it on my second screen. If you're on YouTube, go ahead, say hello in the comments. Same thing on LinkedIn. So let's see. LinkedIn is a little bit behind us on YouTube, but I believe I have someone. Ryo Jose says, hi, Timalyn. Good evening. Thank you for joining me. All right. So when you have an IRS debt that you can't pay in full, the first thing you want to make sure that you do is still file the tax return as soon as possible if you believe that you have all of the information and it's correct. The reason you want to make sure that you do this is because there's a penalty that can knock you out called the failure to file penalty. If you're an individual taxpayer, so you're filing a 1040 and you file your tax return late, the first month that it's late, you're going to pay 5% of the tax that's due. Well, this failure to file penalty doesn't stop at the 5%. It can actually max out at 25%. So let's say, for example, to keep numbers easy, you have a $10,000 debt that you owe to the IRS, right? You see that debt and you say, I'm not going to deal with that right now. I am going to just set the tax return aside and not file it. Well, 6 months goes by. So because this maxes out at 25%, you only have to file it late by 5 months, but let's just say 6 months went by. When you file that, you will have the $10,000 initial tax assessed that was owed, but then the IRS is going to tack on an additional $2,500 because they're also tacking on that 25% failure to file penalty. So again, above all things, and I know we're past the tax deadline. If you haven't filed that tax return yet that has the debt, make sure you get that filed ASAP. Okay? If you filed an extension, you are safe from the failure to file penalty now, but you still want to make sure that you get it filed by the extension deadline. So now we're looking at this balance and you have a few options. Maybe you can get the money, but you just don't have it today. If you're able to pay that balance within 180 days, you don't have to set up an installment agreement. But I do want to give you a warning that you are still incurring interest and you're also going to be looking at the failure to pay penalty. Now, the reason you don't want to set up an installment agreement is because with an installment agreement, that is going to require an administrative fee. Okay, so if you can get it paid within 180 days, 6 months, the IRS says, hey, you don't have to file an request an installment agreement, but they are still going to give you notices in the mail. Okay, now a lot of people, when they receive a notice in the mail from the IRS, they flip out, they put it in a drawer, they don't look at it, they put their head in the sand. You do not want to do that. All right. You want to make sure that you are checking all correspondence from the IRS and that you are responding by sending the information that they need. If you need more time to pay, you want to make sure you keep that line of communication open, because now at this time, it's just like any other relationship. Communication is key. If the IRS is telling you that you owe them and you ignore them, then that's going to make matters worse on you, okay? Because again, if they issue a tax lien, that's going to be filed with your county clerk office, and that is them calling dibs on your assets. So, for example, if you wanted to sell your home and you have a tax lien, that tax lien can actually stop the sale from going through because what will happen is they're going to say you have to take care of this tax lien first. And there is actually a way to do that. But if you hadn't watched this video, you may not know that. That again is another situation where you may want to hire somebody to represent you to provide the relief to get that tax lien removed so that you can go on with the sale of your house. Okay. So let's say you need more than the 180 days. Where should we actually start? I'm going to take you through the process that I take my clients who owe six figures or multiple six figures, okay? The very first thing that you want to do is make sure that the amount that the IRS says that you owe is actually accurate. You want to make sure that it doesn't have too much on there and that it's actually including everything. The way that you do this, and what I refer to as phase one, is by pulling the transcripts, your IRS transcripts. You're going to want your account transcript, and you want to review the year in which they say that you owe the debt. Okay. Now, when someone hires me to represent them, and I have that tax power of attorney, and it's only for taxes, it doesn't allow me to do anything else legally. What this does, it allows me to pull their transcripts, to speak on their behalf to the IRS, and to enter agreements on their behalf. Now, one of the things that I do to protect myself and to protect them as well is there's a box on there that you can check that says consign returns. I don't put that I can sign returns, and here's the reason why. Remember just a little bit ago, I said communication is key in the relationship with the IRS. When I step in the taxpayer's shoes on their behalf to negotiate for their debt, whether it's to get a lien removed, if we're during an audit, whatever it may be, I want them to know that we have a transparent relationship. So the reason I put that I can't sign anything is because any agreement that I go into for them on their behalf with the IRS, I want to make sure that they have actually reviewed it and they have signed it. And in this process, I tell my clients, I don't want you to sign anything if you don't understand what it means. So as I prepare documentation for them, I review it with them. And in addition to that, I say, if you have any questions, make sure you let me know before you sign, because once they sign, I believe we're golden, right? So when I do this for my clients, I actually go back 10 years minimum when I'm pulling the transcripts. And here are the things that I look for that you should also look for if you're doing this yourself. For the tax year in question, we want to verify the amount of debt that the IRS says that they owe. So I want to know what the initial tax assessed was that was on the tax return. I want to know if the IRS made any adjustments to that tax. So sometimes, whether malicious or not, people make mistakes on tax returns. I'm not saying that somebody was, intentionally being fraudulent, but sometimes things get left off. I want to see if the IRS made any adjustments for anything left off. If there was something significant left off, like a significant amount of income or a significant deduction or credit was disallowed, the client may also be facing the accuracy related penalty. So, when you're facing this penalty, this is something else that can make the tax debt actually balloon, right? So, let's say it was filed late. I'm looking at initial tax assessed. I'm looking at a failure to file penalty, and now I'm looking at an accuracy related penalty. When I'm looking at this, I want to see every piece that makes up the debt for that year. And here's why. With that, If there's reasonable cause, I may be able to get some of these penalties abated. And what that means is I can get them forgiven or removed. Now, if you still owe the IRS, you're not going to get a refund of that penalty unless you've paid it. But even if you've already paid it, there's only a certain amount of time where we can get a refund of it or have it applied to the current debt. Now, with that being said, you may be thinking, okay, if I only owe 1 year, why are you going back 10? And again, this is what I do in my office when I represent the client. If you're doing it DIY, you might not want to go back 10 years, but I would urge you to at least go back 3. So when we're looking at penalties, some of them can be removed with what we call first time penalty abatement. With first time penalty abatement, you have to make sure that you haven't incurred that penalty in the prior 3 years. So let's look at an example. Let's say for 2023, which was filed last year, you filed that 5 months late. You had the $10,000 debt. So the failure to file penalty was $2,500. Okay. With that, I want to look to see if you filed the previous 3 years on time. And this is what you'll do if you're doing this process for yourself. You're going to want to look at 2022, 2021, and 2020 because if you file those returns on time, your 2023 may be eligible for first time penalty abatement, which means that you can have this penalty removed administratively, and it's almost like a get out of jail free card. Now, if 2023 was late and you have the penalty, but you also filed 2022 late and also filed 2021 late, you may still potentially be able to get that failure to file penalty removed for 2023, but you'll have to do it with a reasonable cause. Here's the big difference. First time penalty abatement, we're looking at having this done administratively. You can ask for it on the phone and it be done that day. With a reasonable cause, you have to fill out Form 843 and then you have to mail that in, right? And you have to know the language of the tax law. So the Internal Revenue Code that matches the penalty, you have to meet the criteria of one of the reasonable cause reasons. And then again, you have to mail it in and wait and see if the IRS is going to approve it. So in the process, again, we're still in phase 1 where you're pulling these transcripts and you're looking anything that's going to be eligible for the first time penalty abatement, you want to make sure that you jump right on that because that can bring instant relief versus having to wait months and you having to do the research in the Internal Revenue Code. Again, if you're a taxpayer, you're not in the code day in and day out, and nobody is expecting you to be a tax expert. However, in order to get these penalties removed, you do have to be a tax expert. So, this is another scenario where hiring somebody to offer you tax representation may be ideal. And remember, with the tax representation, they're standing in the gap for you in your communication with the IRS. So I'll go back for the people who have joined since I started. I'm an enrolled agent. I have the highest license that the IRS awards a tax professional. I, by their standards, can offer tax representation to taxpayers with a signed 2848, which is the tax power of attorney. Only enrolled agents, CPAs, so certified public accountants, and tax attorneys can offer tax representation services to taxpayers. Now, there are people who can help you with an IRS issue, and sometimes we refer to that as tax resolution. The difference between tax resolution and tax representation is I can fully stand in the gap for you, speak to the IRS, and you never have to worry about the issue again or being on the phone. I'm receiving copies of your notices. When we look at tax resolution, they have limited representation rights that won't let them speak directly to the IRS all the time without getting you involved. Okay. So back to phase 1. If this is making sense, just let me know in the comments, because I know I have about 7, 8 people hopping in and out on Facebook. Just let me know, yes, Timberland, this is making sense. If you have any questions, need me to clarify anything, just let me know that in the comments as well. Okay. So we're in phase one. We have all of the debt mapped out, right? So we know how much the initial debt assessed was. We know how much the penalties are, what type of penalties they are, and the interest. Okay. So when we're looking at those penalties, we have the failure to file penalty, we have the failure to pay penalty. And again, if something significant was missed, such as income, or if we have a significant deduction that was disallowed or significant credit, we could also be looking at the accuracy related penalty. The next phase is going to be compliance or abatement. And again, this is in my firm, and this is how I would handle it if I was representing you. So it is going to be what I advise you to do in the same order if you're going to do this DIY. So in this phase, when we're looking at the different penalties, only the failure to file and the failure to pay are going to be eligible for the first time penalty abatement. Everything else, doesn't matter if it was the first time or not, is going to have to be abated with a reasonable cause. And again, there's criteria for that. So after I've pulled the transcripts, I've gone through everything, I've pulled everything out, I come up with a game plan and I meet with the client again. So, in order for us to negotiate anything with the IRS, you have to be tax compliant. So, if you owe the IRS and the reason that you owe every year is because your withholding is off, we have to get that withholding adjusted, right? Because in the US, we have a pay as you go tax system, which means every paycheck you should have taxes withheld and going to the IRS. If you live in a state that has income tax, like I do in Louisville, Kentucky, I have taxes going to Kentucky and I have taxes going to the city of Louisville. If you are somebody who has investment income, rental properties, you're a partner in a partnership, shareholder in an S corp, um, did I already say rental properties, or a business owner, the IRS understands you don't have anybody withholding any taxes for you. So, what you're required to do is make quarterly estimated tax payments. So, these are going to be due on January 15th. All right. That's when the last estimated payment for the previous tax year is due. So this year, January 15th, the last payment, so quarter four 2024 was due. The first payment for 2025 was due April 15th. Second quarter is due June 15th. Third quarter is September 15th. And then the final one is going to be January 15th of 2026. Now, the reason you have to do these quarterly estimated payments is because it's the equivalent of having wages withheld. So on the YouTube channel, I have a video that walks you through how to figure estimated tax payments. However, if this is a service that you're like, hey, I need that, I really don't want to do DIY, that is something that we do actually offer now at bowenstaxsolutions.com. Okay. But in phase two, the compliance, if any tax returns are missing, we need to make sure that we get those in order to negotiate. In addition to making sure that your withholding has been adjusted, you understand your quarterly estimated tax payment requirement, we have to make sure that you have at least the last 6 years of tax returns filed. Now, with that, if you were going to get a refund for the last 3 years, that's going to be applied to whatever the tax debt is. Okay. If let's say year 4, 5, and 6, you were going to get a refund, I'm sorry to break it to you. You will not be receiving that either. And the reason for that is because we have something called the RSED. So the RSED is the refund statute expiration date. And with that, you have 3 years from the time that the tax return was due, or 2 years from the time that the tax was paid to actually file for a refund. So just keep that in mind. You may be filing certain things just to be in compliance, and sometimes Getting in compliance is going to hurt because it's only going to make the debt go up, but you have to have those last 6 years filed and adjust your withholding. Okay. So we've gone through phase one. We know what all the debt is. We know the breakdown of the penalties. We know the breakdown of the tax and the interest. We get to phase two. We're in compliance. Now we've got all the tax returns filed. We have requested penalty abatement. We have our final balance. What happens if you still can't pay that final balance in full? Well, now we're in phase three, and this phase is what I like to call negotiation. Okay. If the debt is under $10,000, you have not had a payment arrangement with the IRS in the past 3 years, and you can pay this off within 36 months, you may be eligible for what we call a guaranteed installment agreement. The IRS will let you choose the amount, get it paid within 36 months, and then make sure that you don't owe again within those 36 months. And there we have a guaranteed installment agreement. Now, that's perfect for those of you where the shoe fits. You can go right to irs.gov and set up that installment agreement by creating an IRS account, and we're all good, right? But for a lot of you watching the video, that's not going to fit your situation. Let's say that you owe up to 25,000, all right? And you can get it paid within 72 months. You've adjusted your withholding. You can do what we call a streamline agreement, okay? And actually, I'd say up to 50, I still would call it streamlined-ish, because if you have an irs.gov account, you're under 50,000 and you're going to do direct debit, check this out. You can go onto the irs.gov website, go ahead and set up the agreement to pay within 72 months. All right? And I would say run to go do it. And here's why. Again, economy is terrible right now. They are actively levying people. They are actively issuing tax liens. You don't want to get caught up in the mix where your bank account gets levied, but the IRS is shrinking, which means they are letting people go. So now we can get the levy removed, but it's going to take longer because it's harder to actually reach somebody at the IRS. And then you put yourself in a position where you do need to hire tax representation because you can't get the levy removed on your own. Okay. Now, the things that I've just mentioned are referred to as installment agreements. Those are essentially payment plans that you have with the IRS. I mentioned if you owe less than 10, if you're at 25, if you're under 50, can you set up an installment agreement or payment plan if you owe the IRS more? Yes, you can. Remember, I just told you I work with people who owe six and multiple six figures, and we get them in payment arrangements. But everybody doesn't always pay in full. And here's where things get interesting. And again, where sometimes your best option is to have tax representation, because you are going to hire somebody that knows the tax law better than you do, who's going to know the ins and outs, who's going to submit something to the IRS that will get accepted and not just take your money and have it something thrown at the wall that's not going to stick, right? So, one type of installment agreement that I actually really, really like is called a partial pay installment agreement. In this agreement, we're using the tax law to let the time run down that the IRS has to collect and get the client's payment down. Excuse me. With that, we use something that is called the CSED, so it's the collection statute expiration date. That date is 10 years from when the tax was initially assessed. Now, there are things that can push that date out. For example, bankruptcy, a pending installment agreement. Those things that push it out are called tolling events, because during a tolling event, the IRS cannot do any enforcement. Okay. So that time gets added to that date. But With a partial pay installment agreement, you can't get the debt paid off within 72 months. The date is going to be pushed out to the collection statute expiration date, and you'll pay a minimum payment based on what your financials say that you can afford to pay monthly. Now, with that, there is additional paperwork. So, to get that lower payment, and yes, some may fall off, it's typically going to cost more if you hire someone to do it because they have to collect your financials. So, go through an interview process with you. That's what I do with my clients. You're also going to take a look at your monthly income and your monthly expenses. And I will warn you with this, it does get a bit invasive because if the IRS is going to let you pay more than what you legally owe and what they legally can get, they want to know everything. They want to know how much you have in your bank accounts. They want to know where you bank. They want to know your car insurance, how much you're paying for that. They want to know how much you have left on your car. They want the VIN number on your car. Okay? You get the gist. So, with that though, I'll give you an example. I had clients that I was working with last year, and they had a debt that was from 2013. Okay? So we have, I want to say it was like $67,000 from 2013, no tolling events. They're going through a health crisis, the spouse was. And I said, okay, let's take a look at this. 2013 was due in 2014. They filed on time. They had no tolling events. So when I did the math, I knew that the debt was getting ready to fall off last year. So they were getting ready to sign up for an installment agreement and say, like, hey, we can pay this off within the next 72 months. And I said, stop, let's wait. First, we don't want to go into an agreement that we know that you're going to default because you can't pay. Number two, this is getting ready to fall off. So let's use the tax law to your advantage. With that, the C said, gave the IRS until fall of 24 to collect the debt. At that time, the spouse having a health crisis was unable to work. So what we did, I said, we could do a partial pay installment agreement, but let's look at another option of relief. Instead of an installment agreement, let's look at what's called a CNC, which is currently not collectible. So we filled out a 433F, right? Which is a financial statement the IRS asks for. Again, very invasive. You have to give all your information. But the IRS cannot collect back taxes from you if it's going to put you in a financial hardship. So if you are between paying your back taxes and your mortgage, you're going to be able to pay your mortgage if your mortgage is a reasonable cost. Back taxes or a car note, you are going to be able to pay your car note. Okay, get the gist. Back taxes or current taxes, you're going to pay the current taxes. So when we lined all that up, we have this income eliminated. Guess what? When we looked at it based on IRS standards, because I knew how to use the tax law to their advantage, they qualified for the currently not collectible. So we have a 12-month period where they're not required to pay anything. And within that 12-month period, the C said for 2013 arrived. So guess what happened when that date came? $67,000 fell off their tax bill. Why? Because they had listened to my podcast, the Tax Relief with Timalyn Bowens podcast. They had heard me talk about different relief options, and then they made the choice to actually book a call and see if they were a good fit to work with me. And because they had actually got tax representation and I actually knew the tax law and how to implement it best for their situation, they walked away with $67,000 less in tax debt, which did help the spouse's health that was having the health crisis. And then they had some more breathing room because that wasn't all their debt, but they knew within 5 months that spouse may be back to work. And now that the debt was less than half of what it was before, they probably reasonably would be able to get it paid off. Okay. So, again, another instance of just where knowing the tax law was able to get a significant amount of debt dropped off. Now, another option, and there are two more options, right? Because there are a variety of different installment agreements you could look at. There's currently not collectible that I just talked about. And then there's the one that everybody talks about on the commercials, whether it's radio or TV, the offer and compromise, or it's pushed as the Fresh Start program. You hear saving and only paying pennies on the dollar for your tax debt. The offer and compromise is a viable option for those who owe the IRS and can't pay in full. However, it's not a one size fit all where everybody qualifies for an offer and compromise. Absolutely not. If that were the case, don't you think everybody would be doing it? Here's the thing to know. Now, within the taxpayer account, you can submit your own offer and compromise online. That's a new feature that just came out this year. However, even though you can do it yourself online, doesn't mean it's easy. For example, take TurboTax, for instance. That is a software that helps taxpayers do their own taxes, right? Just because it's DIY, just because they're quizzes that ask you questions, doesn't mean it's done right. Same thing is going to go for the IRS offer and compromise online submission that you can do through your account. You still need to understand the tax law and how you fit into the situation. So let me give you this advice. With an offer and compromise, the IRS does have a nice tool, the pre-qualifier. Even if you qualify with the pre-qualifier, there may be some caveats where you don't actually meet the criteria because you're not working with an actual person. However, if you decide to do that, here are some things to know. The IRS is going to look at your age. And the reason we're looking at age, because we're looking at your ability to produce more income later, and we're looking at assets. Okay. But a lot of people don't understand when they are wanting to do this offer and compromise and just give the IRS something and make the debt go away. The IRS is looking at your ability to make income until that collection statute expiration date, right? If you have a 2024 tax bill that's, let's say, $100,000, but you're in your 30s, you're in the prime of your career, you're making multiple six figures, and that's how you even got a tax bill that big. The IRS isn't going to let you just make an offer and give a lump sum and it go away. Why? Because they have 9 years and some change to collect that from you. You're not going to get off that easy. And in the midst of that, you will have to fill out a 433A OIC, and there's a Form 656 booklet that you have to fill out. Okay. Now, when you're looking at that and the number that comes out, again, because your potential to earn income is still high, you're not going to qualify for the offer. Now, that's with age, the ability to make income. If you also have a lot in assets, typically we're going to look at you not being able to qualify. And the reason I say typically is because there's always, always an exception, right? And I'm not going to talk about all the scenarios here, but when we're looking at an offer and compromise, you have to make sure that your offer is a certain percentage of your liquid assets. Okay. So let's say the person owes $100,000 again, just because that's the clientele that I work with. But they have 60,000 in their bank accounts across all their bank accounts. They have a car that's worth 20 something thousand. They have a retirement account that's 300,000, and they still have the ability to work. No offer they make would be less than the amount that they owe. So again, the IRS is going to reject that because even if they give the person 72 months to pay it off, because they have the ability to make income, because they have assets that they could liquidate, the IRS likely, and again, this is surface level because there are exceptions to everything, they're likely not going to accept that offer, right? Because they can push it out and still find a way to squeeze the money out of them. And that's why they use enforcement items like the tax lien and the tax levy. Excuse me. So, one thing that's overlooked, and again, like I said, the offer and compromise is viable, but it's not a one size fits all where everybody can just submit an offer and compromise and it get accepted. We've gone through the installment agreement. We talked about a few different kinds: the guaranteed installment agreement, the streamlined agreement, partial pay agreement. We've talked about the currently not collectible. We've talked about the offer and compromise, but bankruptcy is an option for some people as well. If the initial tax should have been assessed 3 years ago, the last assessment was 2 years ago, and nothing was added to it in the last 240 days, it may qualify to go into a bankruptcy and be discharged if the whole thing is not paid within that. Now, if the IRS has already put a tax lien on it, that means the taxpayer will end up paying that debt back anyway. Okay? I can tell you the tax implications of bankruptcy and taxes, but I am not a bankruptcy attorney. All right. So I will give that disclaimer. You need to make sure that you are talking to a bankruptcy attorney and understanding how that part of it works. And understand too that this live stream and these scenarios are all for educational purposes. I am not your personal tax professional unless we have assigned 2848. I'm not your tax representative. So, all of these different scenarios are examples to give you a starting ground, but it's not legal advice because you're not my actual client. But to recap, if you're going to DIY this thing, you want to make sure that you have pulled your transcripts, you're looking at them and confirming everything that the IRS says you actually owe, because you don't want to go into an agreement about something that you don't actually owe. You want to understand if there are penalties that you can have reduced or removed using a Form 843, right? The next phase for compliance or the abatement, you want to make sure if any tax returns are missing that you get those filed. Again, if those years you would have gotten a refund, it will be applied to the debt, which is still a win because now the debt has gone down. If you weren't going to get a refund, it stinks because now that balance has gone up, but you understand that you have options. And then if anything is eligible for first-time penalty abatement, this is when you want to ask for that. If it's not eligible for first-time penalty abatement, you want to review the rules for reasonable cause abatement. And everything that I've talked about in this stream, you can find out more information on the Tax Relief with Timalyn Bowens podcast. So my favorite place to refer it is on Spotify. However, you can listen to it on all podcast streaming platforms or even on YouTube. Okay. So I have episode 10 where I talk about installment agreements. I have episodes 2 and 3 where I talk about tax levies and tax liens. I talk about accuracy related penalties. I talk about reasonable cause penalty abatement, first time penalty abatement. So I'm not going to just leave you hanging right after this stream. I'm providing you with those resources as well. But if you've been listening to this and you're like, you know what, this is a lot. I'm thankful for this information, but I know that I can't do this on my own. I want to see if I am a good fit to work with Timalyn at her firm. Perfect. I'm going to tell you how. First things first, like I said, I'm based in Louisville, Kentucky, but Bowens Tax Solutions is a virtual firm. I have clients not just all over the country, so literally California to New York, but I have clients in different parts of Europe. I have clients in the Middle East. Okay. So no matter where you're at in the world, if you have an IRS tax problem, I can help you with that if we're a good fit to work with each other. So I'm going to actually pull up the Bowens Tax Solutions, sorry, website. Let me see here. I will get it pulled up. So you will want to go to www.bowenstaxsolutions.com. And for those of you on YouTube, I'm going to drop that in the chat, and on LinkedIn, it should already be up there. So you'll know you're in the right place when you see the logo that's right here on our screen, but then also there I am. Here is a little bit different, but it's still me. So you can see testimonials that other clients have left. And I always say this, if you're looking at a business's reviews, go look at the third party stuff. So this is taken from third party spaces, but you can go check out the reviews that are on Google as well, or the LinkedIn recommendations if you're over there. You can go right here to book now. Now, some of you guys will watch this and you will still want to, in a way, DIY, right? That's okay. I do have the option where you can book a one-on-one consultation for an hour, or if you want to see if you're a good fit to be a client, you can book that call. Now, the difference in those calls, if you know you're going to do DIY and you just want my direction, you already have your transcripts, you want to know what to do next, you can book this tax relief consultation phone call for DIY. Now, it is $500, but think about the example where I told you the couple was getting ready to do an installment agreement and they were about to put all this debt in an installment agreement, or attempt to anyway, and they already knew that they were going to default within 2 months, right? And you know, if you default with an installment agreement, the IRS can come, issue the tax lien, and levy your account. Instead, we got the paperwork filled out for them to get in the currently not collectible, and then the $67,000 fell off. Maybe you don't have the money for me to represent you as your EA, but you still want my guidance. That's what this $500 Zoom call is for. It's for us to go over your case so I can tell you what to do next. If you simply have a notice that you need help with responding to, we're looking at this. If you owe $10K or less, I'll tell you exactly what to do with the IRS to make sure that you get that squared away. Okay. Or if you're like, I know I absolutely do not want to do this, you can also book the tax relief discovery call. Now, on this call, no tax questions, no tax guidance will be given. Instead, I'll be asking questions about your IRS debt, how we got there, and what can you reasonably do? Because again, I take everybody through the 3 phases because I understand tax law and how it works. Sometimes taxpayers aren't being malicious, but they don't tell the whole story. And that's simply because you're not a tax expert. That's okay. You don't have to be a tax expert, because if you were, you wouldn't be reaching out to work with me, right? So let the shame go away. Let the guilt go away from being in this situation. Let's make sure that you get it taken care of. So if you have any questions, feel free to go ahead and put them in the comments. But also, again, if you'd like to book a call with me, you can go to www.bowenstaxsolutions.com to book any of the calls that we just went over. And again, if you're still on the fence, make sure you check out the Tax Relief with Timalyn Bowens podcast, which can be found on YouTube, Spotify, Apple Music, all of those platforms. Because as I say on the podcast, it doesn't have to be me but just make sure you get the help that you need. And thank you so much. One of my LinkedIn viewers said, "Great information, Timlin." I hope you all found it helpful. Have a wonderful Sunday evening and an amazing week. I'll see you all next time.